Hi, and welcome back to our edition of Technically Speaking. My name is Violeta Todorova, and I'm Senior Market Analyst at Legacy FX. Today, we will discuss number of stock indices and our expectations in the near term. On Tuesday, the Reserve Bank of Australia surprised investors by hiking interest rates by 50 basis points against consensus expectations of 25 basis points, bringing the official cash rate to 0.85%. Inflation in Australia has increased significantly, and the RBA is committed to doing whatever is necessary to ensure that inflation returns to target over time. Governor Philip Lowe said that the size and timing of future interest rate increases will be guided by the incoming data and the board's assessment of the outlook for inflation and the labor market. The S&P ASX 200 index declined sharply on the news, breaking below support of 7,144 points and ending the session down 1.5%. The breakout confirmed a small top reversal pattern on the daily chart, which suggests that further weakness to 6,900 points is likely in the coming week. Moving to European equities, the DAX 40 has been trading in an upward trajectory since May 10, in tandem with global equity markets. The current upswing is approaching a band of overhead resistance between 14,790 and 14,940 points, which is solid in our view and is likely to hold. The daily RSI indicator remains below its bear market resistance, showing that internal momentum conditions are still weak. In our view, the index is likely to remain subdued ahead of the European Central Bank meeting on Thursday. The ECB is widely expected to make it clearer that to tighten monetary policy to combat record high inflation. ECB President Christine Lagarde outlined a few weeks ago that the central bank should start lifting its deposit rate in July from its current rate of minus 0.5% to about zero by the end of September, before raising further to a more neutral rate. The market concern is that policymakers could signal a sharper tightening, resulting in further pressure on equity markets. On Tuesday, data out of Germany showed factory orders fell for a third month in a row in April, pointing to at least one quarter of economic contraction. Orders fell by 2.7% on the month, following on from declines of 4.2% and 0.8% in the previous 2 months. A break below support of 14,300 is highly likely and would suggest that the rebound from the May 10 low is complete, which could trigger a pullback to 13,900 points first and to 13,500 points thereafter. The main indices on Wall Street have been quiet over the past week too, as investors are awaiting Friday's CPI report for May and clues from the Fed on the future path of monetary tightening policy. The expectations are that the Fed will raise its benchmark rate by 50 basis points next week and in July. However, the outlook for the rest of the year is unclear, and the CPI report could guide expectations of whether the central bank returns to a more typical 25 basis points move or pauses its hiking cycle. The daily chart on the S&P 500 index shows that the market has been fluctuating in a narrow range between 4,070 and 4,200 points, and we see a very good probability support of 4,070 would get broken, which in turn could trigger a fast decline to 4,000 first and to 3,800 thereafter. Overall, we expect global equity markets to remain under selling pressure over the medium term as central banks around the world hike interest rates to combat rising inflation. Thank you very much for watching. See you next time.